Well, guys, we have got a lot to talk about in this Sunday video where we go over trade setups for the week ahead. We'll be taking a look at indices, commodities, currencies. We'll also be talking about trading setups going into this week that I am personally watching, as well as I will be showing you my current positions, all of them, the good and the bad, that I'm dealing with in the markets right now. So this one should be good. Again, we've had a breakout to the downside if you're looking at the Nasdaq, the S&P, and gold still hovering at all-time highs or near so. So are we going to see a break through those highs? Is the dollar index going to keep going higher? And is the S&P 500 and Nasdaq going to bounce? Or is this the beginning of something bigger? Let's jump into all of it in today's video. Let's get started. And just real quick, feel free to skip this if you don't care, but this is a little bit of my personal life. I don't talk about it very much on YouTube, but this is me, this is my wife. Last night we went to a friend's wedding. This is the friend, and this is his wife, and they're great people, and we had a lot of fun. Today we are, after this, now we are actually working towards training for a marathon. You can see the crazy look in my eye as I run for these training events. But my wife and I currently, we're about to run 18 miles today, which is insane to say the least, but it's part of our training, and we are running a marathon in Ireland this summer, and it's going to be kind of crazy and really fun. But just figured I'd throw that out there. It's kind of fun life updates. If you've watched the channel for a while, I've shared a little bit of my personal life over time. Got married in 2022, and just anyways, figured I would share that. If anybody's ever ran a marathon, let me know. Put some comments, give us some tips down below in the comments section. Anyways, I wanted to start here today with the dollar index. So the dollar index remained elevated. We saw a continued push and breakout through this level here at 105. But since that breakout, a lot of people have been saying, this is overdone. You got to get a pullback. You got to see this thing correct. But it doesn't seem to be the case just yet. The dollar strength is still very much alive. And if you're somebody who is waiting for a pullback, or you're even bearish on the dollar index, I think we need to see some sort of data or some sort of solid case fundamentally to get the dollar to crack here for the short term. That being said, for me, I'm a buyer on pullbacks when it comes to the dollar index at this time. If I take a look just really quickly at some currency pairs like Euro USD, there's some key levels of resistance here around 1.07. The pound dollar, same story. Real big slide this past week for the pound, as you had a lot of risk on currencies get really beat up, as this was a very traditional risk off week. Here's the dollar yen. The dollar yen continues to look strong. This is kind of a little bit idiosyncratic to the rest of the currencies because, although the yen is traditionally a risk-off currency, right now there's just some specific stuff with the yen where people are really unsure if they have the ability to continue to support their currency against the dollar. People have been talking about intervention, but that story seems a little bit weak compared to just strong CPI data, strong jobs data out of the US, which continues to float the dollar higher. So in currency land, basically everything is getting a bullish reading on the edge finder for the dollar. I'll show you that really quick. So what I'm going to do really quick on the Edge Finder is I'm going to the top setups page, and I'm just going to filter for major currency pairs by clicking this only button. If you have the Edge Finder, this is a useful tool. So if I go here, check this out. So we've isolated all of the US dollar crosses, right? So all of the major crosses. And what you can see here is that across the board, the Edge Finder is pointing towards dollar bullishness, and it's been doing this for a little bit of time. The bullishness call on the Edge Finder recently has been very spot on because, again, the dollar has just floated higher in the last few weeks while we've gotten these signals. So why the bullishness? So again, when I say bullishness for the dollar, you can see euro dollar's bearish. That's bearish euro, bullish dollar, Kiwi dollar, bearish Kiwi, bullish dollar. Just reminder of how currencies work for my non-currency trading friends who are just curious. Again, if you don't trade currencies, stick around. This stuff still matters, and I always encourage people who don't trade a market that I'm talking about, listen through it, because fundamentals are pretty universal. It doesn't matter if you're talking currencies or gold or indices. While there are nuances and things that you need to know about each, all of it is important. So the dollar strength here really a lot of the score points come from the economic data section. What we can see here is when compared in GDP, most currencies are either breaking even in terms of their how GDP numbers are looking relative to the dollar, the way the Edge Finder scores it, right? So if you look at manufacturing PMIs outpacing their counterparts for other countries, other currencies, right? Services PMI, not a huge, breakthrough. In fact, U.S. Services PMI came out lower than expected, so not particularly bullish for the dollar. But then you look at retail sales. Retail sales really strong for the dollar. Inflation really hot, strong for the dollar. Employment change, right? Most of these factors are leaning towards dollar bullishness. And so this is when I say, when the Edge Finder is computing all of this economic data for you, this is the idea. It's going through all of these different reports and saying, how does it size up against its peers? And then it's automatically scoring that for you and then pointing it out over here. So generally speaking, for currency people, this is going to be my stance towards all of these currencies going into the week ahead. And the latest COT data is in on the Edge Finder. Let's go through this together. Now, if you don't know what this is the latest moves, basically, by institutional money that is tracked on the Commitment of Traders data from the CFTC. So big firms have to file with the CFTC. Now, this is a few days delayed, don't get me wrong, but it's still very useful data just to see where institutional money is going long or going short on a overall summarized basis. So let's go through the net positioning first. Now, the net positioning takes into account just all contracts traded, all contracts reported, and it says where are they bullish, where are they bearish. And what we can see is gold, oil, silver, the Nikkei, the Dow. That's your top 5 most bullish assets. And if you hover over this, if you have the Edge Finder, you can always see the particular percentages, either long or short. And if we flip it around, we take a look at our most bearish readings, we can see the yen, the Swiss franc, the Aussie dollar, the CAD, and bonds, or the 10-year bonds specifically. So we tally all this up. You can see, again, we have some things that are bearish, some things that are bullish. But one thing I like to point out heavily is that if you're more of a trader, not really a longer term investor, this section is what you really need. This is the more important section of the Commitment of Traders data. These are calculated fields that we've built in the Edge Finder to make the COT data way more reader friendly than what is just reported on the CFTC's website. It's just a huge text file that you can download. But this, the purpose of this is to color code and make things way easier to understand. Let's see what they did week to week. This is the latest change. And what you can see is, look at this. Net buying on the S&P 500. Despite what was a terrible week for the S&P and the Nasdaq, we saw buying on the S&P. I'm curious, the Nasdaq, look at this. Slight buying in a week where there was just, crazy selling. Russell did get sold. So for the indices traders, we've got one index here that is, or index that is being sold. Here's 2. So 2 sold, 2 bought. But the S&P, I mean, look at the massive buying that went on here. Very impressive stuff, to say the least. Bonds also got bought, which is very interesting, perhaps a bit of a safe haven move. And again, if we take a look at like gold very flat on the week. So nothing huge to write home about on gold there. But feel free to pause if you want to look at the rest of these different items. Also, if you have not already taken advantage of our 40% off sale, we are doing our biggest discount sale of the year. Down below in the description, if you want to get a copy of the Edge Finder, the link can be found down there. So if you click that link and use that code on the screen, YTVIP, that will get you the 40% off discount that we're doing right now. Why 40% off and why now? Well, right now is our 2-year celebration sale that we're doing since we launched this product. And while I'm sharing my personal life here a little bit with some of those pictures that I shared with you earlier, I'll also mention that the Edge Finder has been, for me personally, one of the coolest things I have ever done to build a tool with the help of a community of thousands of traders, the feedback and surveyed responses of people all over the world, as well as my own trading journey and experience to build this stuff. I did not build this solo. I've built this with a team of developers, and there's been a ton of money invested and time invested, but it's been the project of a lifetime for me. And I continue to look forward each day to going to work, and I'm running a software business, so most of my day is spent designing tools, working with customers and all that sort of stuff. So we work incredibly hard on it, and again, take advantage. Don't miss the sale. It is the biggest one that we do all year, and there you go. So let's get back to the charts here for a moment. What we can see is, if we go back to the top, I want to talk a little bit about this S&P move. You guys know that in terms of the indices, I have been on the sidelines for the most part in recent weeks. But with this pullback, I am starting to get a little more intrigued. And in fact, I'll tell you what I've done about that in just a second, but let's do some technical analysis quickly on the S&P. So clearly we had this upward trend. We have all these zones marked. I haven't changed these zones where they are put, but I have changed the colors. So check this out. So we've seen, of course, levels of support along the way up that were just, areas of defense for the bulls. There was no breaking these levels. Buyers would just step in every single time. We finally cracked that, combination. I would say, if you were, depending on how you mark the charts, if you're a trend line guy, trend line guys probably got this quickly, right? Because I guess support zone people could also have marked that, you kind of broke this, but trend line, really looks pretty clean here. You had this upward trend, price broke. This candle right here arguably was the change in pace, right? You had these levels of support that if the trend had continued, you would have seen that. We didn't see that, right? So you had this kind of failure candle right here. Price comes trailing back up. And, at that point, I was like, is this just a false breakout? Or are we just going to keep going higher? And no, we rolled over, had one more kind of bounce at this level of support before just selling came in. And I'll tell you something about the behavior intraday, because of course I watch this stuff throughout the day. I'm live streaming. I'm on my screens, I'm watching this stuff, and I'm sure a lot of you guys are too if you're watching indices. We went from this kind of market intraday. Sorry, let me try this over. This is how we used to, during this period of time, how the market would usually use. You'd go sideways, maybe dip once or twice, and by the end of the day, you'd be up. That was like an intraday candle. For the first time recently, we've started to see this, where the market has been moving up in the morning and then just tanking in the afternoon. And I noticed that pattern, and it actually prompted me to short the Russell. I am still short the Russell. This is a position that I have on, and I'm in profit slightly, but my risk has also been adjusted. So I initially had a stop loss up here. I've trimmed my stop loss very tight here. I did add a second position here. So I am short the Russell. It's not a huge position for me, but part of the reason for this was that the edge finder was bearish on the Russell. And so that continued bearishness has me in a short position, selling right here. Sorry if you just heard my cat. Be right back. Gotta open the door for her. So the Russell, again, is a bearish setup for me going into the week. The other ones that you can see here on the Edge Finder's top setups page are all over the screen, and then more bullish ones down here. But I have a Russell position, and while I'm on the topic of my positions, I'll also show you my silver position. So I am also long silver, and this one's been kind of boring to watch. It's been really choppy, but I don't mind. I'm holding through the chop here. Price came down after this big sell-off that, earlier was it this week or last week? A couple days back, yeah. I bought on that pullback. I believe it was 2 weeks ago, and price, bounced initially, but it's just gone kind of sideways on me. I don't mind holding silver long on the kind of consolidation zone here, as long as we don't break through this level low. If that breaks, then yeah, I need to take a loss and get out of there. I have no more oil positions. I'm out of my oil positions. I'm out of my gold positions. Currently just long silver, short Russell, and then I have some options trades that I'll get into in just a moment. Let's talk about the Nasdaq though. The Nasdaq really took a nosedive here. After it broke this level of support, it was just down, 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 led mostly specifically by the semiconductors. And we'll take a look at the SMH. This is a semiconductor ETF, and you can see a spoiler. I did sell some puts on this, and I'll tell you guys more about that in just a moment. But the semiconductor ETF, this is, of course, NVIDIA, AMD, many companies in the semis world that, of course, weighed down heavily on the Nasdaq. So technology companies specifically really weighed down this week, both the S&P and the Nasdaq, but because of the Nasdaq's high composition of tech companies underneath what the Nasdaq is, right? The Nasdaq is a basket of stocks. It's very tech heavy. And so this tech heavy week, you saw a little bit of risk off sentiment really pump it lower. So where are we at with this? Well, for me, this looks short-term bearish. I wouldn't say that the whole uptrend is just, beaten out. Take a look at the weekly chart. And if you take a look at just kind of momentum, I would still say we are still in an overall upward trend on the weekly chart. Take a look at the daily chart. We got some struggles here. In terms of a short-term trade, I don't have any trades or plans on the Nasdaq or the S&P. Again, my software is not giving me any sort of confirmation for either one of those. If we do see, the S&P or the Nasdaq start to pop up into bullish territory, perhaps I'll look for a trade. But right now, in terms of short-term stuff, nothing here for the Nasdaq. Again, that just looks super bearish. And right now, I wouldn't be surprised if we continue to see that pattern of pops turn into drops, right? So I would, that's how I entered the Russell. You can see when I observed that pattern, this pop here up into resistance on the 4-hour ended up into me adding to my trade. And so far that looks good. Will I be right in doing that? Time will tell. If I take a loss here, the loss is controlled. I've already, like I said, moved my stop loss tight above this level. So my risk was cut into a third basically from where I initially entered. So after this big drop, I've trailed this stop. And if we do drop, wow, I just rhymed like 16 times, but if we continue to roll over, then my goal will be to continue to trail stops and let that winner run if I can. So we'll keep an eye on the Russell definitely out of the gates this week. Next up is gold. Of course, I apologize for only getting to gold 16 minutes into the video. I can already hear people picking up their pitchforks, their torches, and their machine guns as I've taken too long to get to gold. And I'm joking. I love talking and analyzing gold as well, but my audience is just so, I think it's the #1 favorite asset on my channel. Close second would just be the dollar index, and I think a third might be Nasdaq. That's my guess. I don't know. Comment your favorite thing you'd like me to analyze down below in the comment section. Actually, that would be very, very useful just to me, as I make these videos. What do you want me to cover the most? Obviously, my favorite thing to cover is gold and the Nasdaq, but it kind of rotates. I don't usually talk too much about the Russell, but when I saw a trade in it, last thing I want to add about the Russell, why the Russell, why now? Interest rates look to be higher for longer. That looks to be the theme that we're sticking with right now. Economic data is super strong. I showed you that US dollar breakdown on the top setup scoring algorithm, the Edge Finder. Economic data out of the US looks really strong. That's leading to yields continuing to stay elevated. Yields higher for longer means that companies that are more sensitive to debt, like the Russell, which is smaller companies, they're going to be put into more pressure. This is a very volatile index. It's more volatile than all three other ones, right? These ones, the Russell is usually much more volatile. And so there is some upside on that. Again, let me get back to gold. Put down pitchfork. It's okay. So if I look at gold, so where are we at? We've entered into another period of consolidation. After this big upward trend, I wouldn't say this is bullish. I wouldn't say this is bearish. But this is currently just a choppy market. If you're somebody who said, look, it's going to sell off, this is the end, I mean, you probably feel pretty silly now that we've just gone down and then back right up, right? So many people commented on my videos, Nick, gold, the top is in, it's not going higher. And, they were selling. And I'm not teasing these people, but I'm just pointing out that just remember in markets, especially when something is in a roaring uptrend, you don't know when the top is in. It may be so tricky because look at this candle, you might say the top is in, but that same type of candle has printed in the past, big wicked top candles. And then, here's where people might have been right in this scenario. But if you were looking at this, a lot of people said the same thing over here, and then it just ripped higher. A lot of people said it over here, and sure, there was some short-term kind of pullbacks in the move, but this one happened, right? And then boom, just flew higher. So if you're trying to catch like a short-term little pullback, sure, maybe there's a little bit of, wicks can lead to a bit of sell-off. But my point is, here's another one, that one just, ripped through it. So you just have to be careful. When you're in an uptrend, the path of least resistance is to continue higher. So yes, you've got some wicks here, but that doesn't mean that this market has to just tank from here. So what I'd say is watch the move here at 2400. Is price going to be accepted at 2,400? What I mean by that is, are we going to close above 2,400 for the first time in history, right? We've had intraday, spikes above it, but are we going to close above 2,400? That's going to be the question. If you get a close above, again, this is off the table and we probably just push higher in my personal view. There's a lot of geopolitical stuff in the world right now. That being said, why am I not in a position? The Fed not cutting rates for longer takes a lot of the story out of it for me for gold. And that's also reflected in our scoring algorithm here. You can see gold is getting a neutral reading. Some of that economic data that we talked about earlier, when we isolate for gold for a second, I'll show you something. Let's go just metals here for a second. So gold here, a lot of that economic data being so strong is not very positive for gold, right? So that's what's pushing back on the score being too high. Rising interest rates, the yields, right? Unemployment rate, jobs data strong, retail sales strong, manufacturing is strong, GDP strong. So this strength is arguably bearish for gold, but not enough. We still see the COT data strong for gold. We see seasonality. The point is, it's kind of mixed. So when you get this mix, what this tells me is no trade, right? There's no trade for me on gold unless I have a lot of factors lining up. That being said, why silver? Well, silver's different than gold in a key way. Gold is considered more of a store of wealth, and silver is considered more of an industrial metal. People use silver, humankind uses silver way more industrially. So I don't know if that's a word, but they build planes with it, solar panels, chips, everything. Many things use silver as an industrial metal. Same thing can be said for copper and platinum. Gold is more of a people buy it when they are wanting to park their money in something relatively stable. So it's like the ultimate stable coin for my crypto friends. This is like your ultimate stable coin of all time. So when you talk about silver and silver looks bullish, it's because that economic data being strong leads to stronger demand for raw materials, right? That's kind of the thesis behind the way the Edgefinder scores traditionally these industrial type metals. But also the same way you can see if we take and we add in here oil's also getting a lot of bullishness from those same factors. You can see that when we strip out gold for a second, in fact, can I do that here? I can. So I'm going to take out gold. You can see these things economically line up exactly. They're scored the exact same way. Inflation, retail sales, etc. Are kind of the way that works. But anyways, I like to share the underwork, how things are working in the Edgefinder the best that I can. So again, something to think about. Let's also take a quick look at retail positioning while we're on the subject. What we can see here is that retail is starting to get really bearish on certain things and bullish on others. Nasdaq, we'll start here. Nasdaq's getting a bearish reading because retail traders are heavily buying right now. Take a look at the Russell. Russell's also getting a bearish reading. Retail traders are very long Russell, so very interesting there. You take a look at the dollar yen, UK 100, German 30. Feel free to pause the video. Neutral on gold here, 47.53. So we'll keep an eye on that to see what retail traders typically lean into. We produce a contrarian signal on the Edgefinder that says if it's over or under 60 or 40, give us a contrarian reading. And so we've got that. Put call ratio is probably interesting too. Let's see if this, So put call ratio rose a lot here recently. Actually, we're missing some data. This is back to March 22. I'm gonna have to fix this, but the put call ratio, the reason I wanted to show it is that the put call ratio shows you where investors are, are they buying puts or are they buying calls? So also look at this latest round of AAII investor sentiment data. This tells you what stock market participants are thinking. We saw a significant shift into bearishness, a huge shift, a 10% shift into bearishness in the latest reported survey. Very interesting to see that as market participants are a little bit more worried as we go into kind of everything that's going on. I also want to take a quick look at seasonality here going into the month of, May is next, but currently, April's kind of stayed true to historical tendencies. We usually, in the last, let's say 10-year average, right, we're pretty flat on the S&P, meaning we could go either ways. Well, this week or this month, we've definitely gone a certain way. and it's been not the good way, right? Going into May, however, there is some seasonal bullishness for the Nasdaq, the S&P. If we take a look at May here, 1.3% on the last 10 years. That's pretty good, bullishness. So I'm actually going to show you guys now what I've done with some of my own personal trades. So I'll show you that on the option side. All right, guys. So this is my WeBull platform where I've got, a lot of my trading. Well, all of my trading pretty much goes in here on WeBull. And I want to show you just kind of where I'm at with these options trades that I've taken. So I took several, and you'll note that they look absolutely horrible. But just remember, right now when I'm filming this, the market is closed. And how options sometimes do is they give you a crazy quote, like basically think about like if you're on a Forex broker or a stock broker or something, and the spreads just went crazy after the market closed. That's kind of what's happening here. But I'll still show you some of the trades that I took here. So I sold puts on SMH. This is the first one that I did. I did a lot of put selling this week. So the market started to really sell off, and I went ahead and said, you know what? I wouldn't mind owning some semiconductors and building a position on this over the longer term. We've seen if this gets assigned, this is going to be an 18% pullback from peak to trough. So if I get assigned here, we've got a level of support that I like. So what this means is that I made a promise here. I will buy these shares at this price no matter what on the strike on the expiration day. I'm making that promise to the market. In return, I get paid to set up that bet because somebody else out there wants to buy puts. They want to bet the market's going to keep going down, and that's fine by them. I like this area of the market for the longer term. I'd like to buy some. And so if this continues lower, what will happen is I will have to buy the shares here at 195. Regardless of where the share price is. If the market tanks next week and we're down at 178, I will still have to buy the shares at 195 and be in an immediate drawdown. But what do I get in return for that? Well, for this position, what I did is I sold SMH for $1.27. So I collected $1.27 per share. So what we could do here is some quick calculations. So I'll go calculator and I'll just show you this. $1.27. I did 5 contracts, so that's 500 shares. 500 shares. I collected $635 for selling this put 1 week out. It expires this upcoming week, and so that's going to be on Thursday or Friday, one or the other. So I've sold puts, collected $635. If the market bounces here this week, I won't have to do anything. I'll just keep my $635. If this market rolls over, then great. I will be able to buy shares that I want to buy anyways, and I'll get paid the $635 too. So not bad at all. I really have loved my strategy I've used for options for the last, now about year and a half. I've been selling puts, and with this recent volatility, I'm absolutely looking at a lot of stuff that I've wanted to own, wanted to pick up in the portfolio, and basically trading options on it. So what we can see here is $78 puts on XLC. This is going to be companies like Netflix and Google and Meta and basically communication services ETF. That's XLC. I've sold puts at 78 for this one, weeklies. So I've collected some premium on that. And then let's see, what else did I sell? VOO, I will probably get assigned on this one. So I sold puts, and this is already, so this expired Friday. So here's an example of what's going to happen. I don't have the shares just yet, but on Monday I will be put these shares at 460. So even though the price is at 455, I'll be in a slight loss. But why slight? Well, because when I factor in that I also got paid a premium to write this option or sell this option, my entry price will actually be like somewhere around here. So I'll be basically just near break even, and any sort of bounce, I'll be in profit when considering the premium that I've collected as well. And I also, again, these are things that I wouldn't mind owning for the longer term if I had to either. So this is the beauty of selling options. The not so great about selling options is that when you get a huge spike in volatility, it can lead to you getting assigned on a bunch of stuff at what looks like bad prices in the short term. But again, if you have a longer term view on some of this stuff, then by all means, selling options can be a wonderful way to do that. XLY, this is another one that I probably will get assigned on, but we have some time, so there is possibility of a bounce. I've sold puts on this one for, again, April 26th. I have a lot of stuff expiring April 26th, so we'll continue to watch this. XLY is consumer discretionary. Of course, not a very attractive place when the market is selling off. These are like companies like Nike and Tesla, Amazon, the consumer-based products, which, I still think could have plenty of a bounce. I think the economy is really strong, and so I like this area of the market, despite the market itself really hating this area of the market right now. I like it, so I'll build a position if I need to, and then if I get assigned, maybe I can look to sell covered calls against it if it does bounce. If you'd like to learn more about my option strategy, you can find more details by searching up on YouTube Trader Nick Wheel Strategy. It does sound complicated at first, but I promise you it's really not that difficult. It's a relatively simple approach that I use to collect premium on the charts for selling options. And if you'd like to use this broker, there's a link down below in the description. If you don't want to use this broker, I would encourage you, if you're looking for a new broker, guys, do the channel a solid favor. There are referral links down below in the description, but I've also done you a favor. So hear me out on this. All of the brokers that are linked down below in the description have special sign-up perks just for you. So my team and I have negotiated deals with all of these different brokers to give you guys the best possible perks. Like if you sign up with Eightcap, you can get an Edge Finder copy for free. If you sign up with OANDA, you can get a welcome bonus. With WeBull, you can get free shares when you sign up. So I'd highly encourage you. It is free money down below in the description. I'm telling you, it is worth just checking out if you're considering moving brokers. Also, if you use those referral links specifically, you will be helping out my channel. They are affiliate links. And again, we've got special perks for you guys, and also it kicks back for the channel. So I appreciate it very much. I hope this video was helpful to you. Have a great trading week ahead. Trade safe, and we'll see you next time.